Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into a company that's basically trying to find itself and hopefully a good business to merge with. Let's see if we can figure out their next move before they do. They are called Aifeex Nexus Acquisition Corporation, and their annual report for the past year is Our Victim. They are what's called a SPAC, Special Purpose Acquisition Company, so their goal is to find a private company to take public. Think of it as corporate speed dating, only with millions of dollars on the line. Basically, this is a blank check company. It exists to find a business to buy that haven't made any money yet and they are burning cash. The report tells us they are looking for a merger, a share exchange, an asset acquisition, a share purchase, a recapitalization, a reorganization, or something similar, all corporate terms for let's get hitched to another company. Time is ticking. They have until March 6, 2026 to find the company, or they'll have to give the money back to the investors. If they do find a company before then, they can extend that date to June 6, 2026. They need to act fast if they want to stay alive. So what are they looking for in a partner? A good management team, niche deal size with growth potential, long-term revenue visibility with a defensible market position, and something that will benefit from becoming a US public company. They want a company with a strong management team, because who wants to buy a mess? They are hoping to find a smaller deal that has a lot of room to grow. They want something with predictable revenue and that would shine under the spotlight of being a publicly traded company. There are some redemption rights, meaning that the public shareholders can get their money back when they finally choose a company. It's a tough market out there. Aifeex faces competition from other blank check companies, private equity groups, and bigger companies that want to buy businesses. It seems the company doesn't feel at high risk for cybersecurity risk since they're not doing much harm. Let's dig into the financial statements. First, the balance sheet. This is a snapshot of what the company owns and owes. They have about $655,000 in current assets, which is mostly cash to pay the bills. Not too bad, but this will run out quickly. They are holding $86.5 million in a trust account. This is the big pot of money they need to use to acquire a company. But remember, the shareholders might ask for this money back, so the company might not be able to use all of it for an acquisition. They are owing about $862,000 for underwriting commission, which are fees that they will pay to bankers for having arranged their IPO. These fees will become payable when and if they find a business to buy. That big $86.5 million figure that they had in their trust is now being treated as a liability. Basically, it acknowledges that there is a significant risk that they'll be forced to give it back to investors soon. It makes sense when you consider that Aifeex is in a ticking clock entrepreneur. Now let's look at how they performed. Their statement of operations. Since they are a blank check company, they are not making money. The company lost about $85,000. This is not surprising for a company without any real operations. Most of that loss was formation and operating costs and paying their directors with stock-based compensation. To be fair, they did manage to earn $268,000 from the interest of their trust fund investments, so that lowered their losses. Now let's check out the cash flow statement. This shows how cash is moving in and out of the company. Their cash flow statement confirms this picture. The company is burning cash. Most of their activities are just shuffling their own money from the IPO proceeds. In short, they raised a bunch of money, haven't bought anything, and paid some bills. Let's check out some related party transactions. These are deals they've done with people connected to the company. The founders got a sweet deal on their shares, originally only paying about a penny a piece. The sponsor helped them by lending about $500,000 to get started, but has since been repaid. They have a code of ethics and insider trading policy to keep everyone honest, and even a clawback policy. The clawback policy means that if the executives get paid based on bad accounting, they might have to pay it back to track this, okay? Let's wrap this up with my take. Aifeex Nexus Acquisition Corporation is basically a search party. They're looking for a company to bring into the public markets, but the clock is ticking. They've got some money in the bank, but they need to find a good deal fast before the investors get impatient. The team has a strong vision, but it all depends on finding that perfect partner before time runs out. One of the main risks to consider: if they fail to find an acquisition candidate, all the investors will ask for their money back and Aifeex will shut down. Thanks for watching. If you found this corporate deep dive interesting, be sure to like, comment and subscribe for more decoding of the corporate world. Let me know in the comments what companies you'd like to see me analyze next.